Good morning, everyone. Today is Wednesday, June 19th, 2019, and we have a special edition of the Investing Systems Trading Service live show. And boy, is it going to be an exciting one. Actually, I'm wound up because today is, as you know, is Fed Day, and things are going to get exciting this afternoon. So I expect, the market opened and it dropped a little bit and it's kind of bounced back. And so now that the beginning 30 minutes is over, I sort of expect a little bit of a dull day going into the Fed announcement, which is 2 o'clock Eastern time. Let's look at the SPY here. Yeah, so there you go. Super narrow range, first 30 minutes. Um, I'm going to go out on a limb and guess that it's very, very likely that the range will stay within yesterday's range. Like we'll be having an inside day here until the Fed announcement, right? And then when the Fed announcement comes out at 2 o'clock Eastern time, the market's gonna make a big move in one direction or the other or both, which used to be, I'm thinking, a year ago, a couple years, two, three, four, over time, when the Fed comes out with their rate decision, it seems like, the past few times the market's been relatively muted or whatever. But, back in the day, for most Fed announcements, the volatility, the intraday volatility tends to really pick up. Like the market will spike up a bunch and then it'll retrace and then maybe go down and then come up. And so the intraday range I expect is going to, it's going to really be nuts because this is a very important Fed announcement today. Very important, right? And I know we've talked about this on, the past few shows, but here's the last Fed announcement on May 1st, which sort of coincided with the old Wall Street adage, sell in May and go away, right? And it's just interesting because that day, that particular day, the open was the all-time high on the S&P ever, right? Actually, I got the SPY up. Let me put the SPX up here. So, yeah, so the open was 2952 and change, and that basically marked the high water mark since then. And so it's just kind of interesting because here we are. We had this big, I won't say big, but we had this correction. This was around 6%, I believe, around a 6% correction, and here we've rallied back just about all of it, right? I believe, and the financial media looks at like new highs in different ways. So they tend to talk about the closing high on the S&P, right? Like if I was using a line chart here, the highest point would be this day, like 5.3, where the close was like the highest close. But anyway, so that day wouldn't count, right? Fed day wouldn't really count. But the way I look at it, and I've always done this, is basically the intraday all-time high because I figure why not. So let me zoom back out on this chart a little bit here. And what I want to show you is, and by the way, I mentioned this last week and I double checked my math. So this day right here that I have circled, this was when the Fed raised rates for the eighth time in a row, right? There was 8 rate hikes. And you can see that prior to that, the market, had been running up, running. Actually, it had a big sort of a persistent run up into Fed day, which was kind of like a reversal day. Came back up here and made like a little, on the daily chart, a little double top right at this line. This horizontal line is the previous all-time highs that I have over here. And so circled in green is Fed day back in September. And then of course there was another one in here somewhere, right? There was the December meeting or whatever. So But anyway, so look at those two Fed days there. This was the last hike. This was the previous Fed day, and so now here we are. Okay, I'm going to bring Jeffrey into the conversation here. How you doing, Jeffrey?
Great, Bill. How's it going?
Good, good. Good to
We
have
got
you
a
on
we
the
got a
show.
week open here this morning with the Fed news coming today.
Yeah, I was just mentioning that I expect things to be relatively dull. Once typically the first 30 minutes you get some positioning and then things start to get dull and everything is just basically on hold until 2 o'clock. Um, all right. So anyway, I was just talking about how it's interesting that we've had like a couple of Fed days, and then shortly thereafter we've had relatively significant market sell-offs, right? And so now that we've retraced essentially to within 1% of the all-time high again, anything can happen, right? And so what the consensus expectation is that they're not going to lower rates today, right? So at the very last meeting, like right up here on May 1st, the Fed essentially said that they were going to be on hold for the rest of the year. That's pretty much what they said, right? They weren't going to cut, they weren't going to raise rates or whatever. And so in between May 1st and here we are middle of June, the global economy, the economic numbers have slowed down and weakened, and home sales are iffy, and automobile sales are down, and we've got these Trump tariffs and all semiconductor shipments and global trade, and so I mean, it's fairly clear that the global economy is slowing down a little bit, and even though the U.S. is running at about 2%. So anyway, long story short is the Fed is expected to just basically do nothing today, but Powell is going to probably most likely say that they're paving the way for a rate cut in July, which is just next month, if necessary. And
Hmm.
so how basically the market reaction is going to be how dovish they are, how willing they are to cut rates, because between Trump and the financial media, they've sort of told everybody that that they think that the Fed should be cutting rates here, and that they shouldn't have raised this eighth time back here in October, which clearly had something to do with that 20% market sell-off. And so anyway, it's always about what the market reaction is to the Fed.
Sure,
So you
sure.
want to you want to
Well,
talk about this chart from a technical aspect?
yeah, I was going to say if we look at it just from a technical aspect, you can see that the last time the market was up at these levels, we ran way up. We tried to break out above there, the little whack-a-mole effect, and then we came down real steep, and then we bounced like crazy, right? And
Mm-hmm.
so what we got basically, if you look at that, you can kind of draw it, the a trend line underneath the big lows there,
Sure.
the last two pivot lows, right? That go back a few months. You'll see we got a gradual upslope, right? And so, um, but the interesting thing about the most recent, yeah, I was talking about
I
the
gotcha. I gotcha.
okay, the most recent bounce that we had, that was a big short covering rally. Um, there you go. Yeah, that was a short covering rally that propelled us. And so, from a technical standpoint, basically what we did now is we've bounced off of the last big pivot low area. We've reached, and with this Fed news coming today, which nobody knows how the market's going to respond to it, we could see the market go either way, right? Don't forget, now we have things called double tops and triple tops that markets make. So just because we're up at the old highs doesn't guarantee anything. We could, like I said, end up with a double top, a triple top. But here's the thing: if you've been following uh, the stock picks coming through the system, you'll notice recently that we've had a lot of stops tightening up very tight. Okay, the system caught that nice bounce, and so if you look at the open trades and you sort by, you rank them by the highest gains, you'll see some of the nice follow through we've had on this latest wave. and you'll notice how tight the stops are getting. And the system's designed to do that in this exact scenario when we're bouncing back up into overhead resistance, right? So if you're in any positions coming through the system, make sure you're checking these stops over this week and over the remainder of this week to make sure that you're following those nice tight stops.
I did notice that. So what you're saying is the system is is sort of self-adjusting up here now that we've had this big rally back up into overhead resistance.
Exactly, because what we just experienced is a parabolic run up on a big bounce and right up into overhead resistance. So the system sees that and can detect that through various means, and then it knows like on these, and so a lot of your stock setups and follow through are identical, big parabolic run ups. So the system has parabolic stops and it has regular stops, but you'll notice that the regular stops even are super tight now.
Well, that's interesting.
Yeah,
Yeah.
more than we'll take a look at some of them, how tight they are, because the system is anticipating like, hey, we went parabolic and we popped right back up to the heavy overhead resistance. So this is where you want to like guaranteed lock in those profits.
Yeah, well, everything is, obviously a function of price and also time. And what's interesting about this is that, it took from the entire month of May to sort of, have a normal roughly 6% correction. But then in June, I mean, it was literally like, look at this. You're talking like 5, 6 days here to rebound and, like you say, retrace three-quarters of it. And so like the sell-off was kind of a slow duration thing, and then the rebound was parabolic, as I guess you would say it. So pretty interesting. And the other thing I was going to mention real quick, and then we'll take a look at some things, is that in theory, what you were saying about overhead resistance, in theory, this whole area up here going all the way back to last fall, these highs and this high, and however you want to draw something like this whole sort of zone represents what I would say is major overhead resistance, right? And it's not like it's not like the market's just gonna like blast through there and keep going without having to, because there's people that that participants have probably bought at these highs, and they've been underwater for a long time depending on that. And so that's sort of like what actually creates the resistance, right? There's people that got in the market and then held on and have spent a lot of time fretting over being down, and then when the market rallies back to where they're at even, they decide to get out, right?
Yep. They're just praying like, dear Lord, please let the price go back to where I mistakenly got in, and I will promise I'll get out, right? And so, as soon as price bounces right back up into those big congestion zones where a lot of buyers, made an error in their entry, that selling is pre-programmed into the market because they're just sitting there waiting to sell. I mean, a lot of folks will even just put limit orders in right where they want to get out, right? So they could be on vacation and it's going to auto sell them. And yeah, what you mentioned is exactly true. The forces that go on are, we actually have like three different forces that are in a constant tug of war. We have the buying accumulation pressures in the market. We have the selling distribution pressures in the market. And then we have the shorts in there as a little third wheel. And they come in and they can influence the market in both ways. They can come in and when shorts actually take their positions, they're into the selling pressure, and they can actually help the sellers get the ball rolling. But then they can also turn the market and propel the market when they start to cover. And so this is exactly what we saw in that last big swing down. You know, that it's always when we see the market go really steeply down and then make a real sharp bounce. Here's exactly what happens. The selling the selling pressure in the shorts was real heavy on the beginning of the down move. The sellers started to dry up as they get closer and closer to support, right? The smart money is like, oh, we already sold up there, so we're not going to uh, sell anymore. And they exhaust all the selling, get down to support, and the shorts start to cover. That turns into buying pressure because you got to buy to cover. And then the longs see that happening, right, or anticipate it, and they come in and it's like pouring kerosene on a campfire, right? So that's why we get these ginormous swings down and up and all around, right? Those three pressures. But yeah,
Yeah,
interesting mechanics. Go ahead.
I was going to say the Dow weekly chart is a really good example because you've got this sort of zone up here, and in the past three times that it's got up to that zone, you've had a relatively significant sell-off, right? And so here we are approaching it again. On the other hand, you could look at this and sort of say, man, if we don't know, but if like the market is able to get through that, that's what they call blue sky, right? There's volume profiles of real sort of. I've looked at volume profile on a lot of charts here, and it's like the once it can chew through and actually break through, then literally, if I'm just saying, if for some reason the market is able to sort of work its way through that resistance, then it gets to a level where, everybody's up or whatever, and you probably get mad short covering and and then you have blue skies, right? Like there's no history up here, and so that's why they call it blue sky.
And this is kind of exactly what we saw right after Trump got elected. The market was in this kind of this similar pattern, and ended up breaking out to the upside, and then the short covering was massive, which is what propelled us up the whole, a next level. And so, yeah, back to what I was saying. The market makes triple tops. So here's a potential triple top or a potential huge breakout on the third try. So we're back to the coin flip zone in the market. When you see these examples in textbooks, you see the final example after it occurred, right? So we may see a triple top in the market, or we may see that third time is a charm breakout.
Sure, sure, sure. Oh, here's something I wanted to look at real quick was, Apple is one of our open trades, and it's kind of interesting because I noticed that I noticed that the stop on Apple, and let me check this real quick, is really super tight right now. I'm going to tell you what it is in a second here, and then I'll mark it on the chart. And there's a little bit of a delay in the show, but the Apple, which I'm going to mark up here, the trailing stop now is at 198, and I thought that was kind of interesting because typically these trailing stops, they tend to previously they hung way back, but as you explained, the system is kind of self-adjusting. So do you want to talk about how that works, or like how this pattern is working out here since the stop is so tight?
Yeah. So what is going on in the system this last week? I noticed it too, picking up like just a couple days ago. I had to move a bunch of my stops around and noticed how we're starting to really tighten up. The system's got like three different little mathematical little algos that can determine. It's almost like a thermometer hits 100. It can determine when the market is really parabolic over the short term. Little gizmos I designed over the years to detect that. And then if we also detect that we're right up under heavy resistance and we did like a three-quarter retrace, it knows to like batten down the hatches and tighten those stops. So you can see this. Apple's got kind of the same pattern as the general market, and you can see we did a three-quarter retrace back up, and we're right below the last big area of overhead resistance, and we got all three of the little parabolic meters up in the red zone right now. So that's why everything's tightening down real close to price action.
Nice, nice. Well,
Yeah.
that's
So it's basically wanting to lock in. Now here's the thing, the system doesn't know anything about Fed days or anything like that, or and there is no way to really program technical stuff around that. Um, it's already doing it, right? Let's say that the Fed causes the market to, plummet, right?
hmm
We've got all that stuff totally locked in now, like really tight. So that would just be you know, a
Yeah, well, that's the way to do it. I mean, especially like you say, if you get a parabolic run up, and so that's kind of where the parabolic stops that you'll see on some of these stocks come into play. And yeah, it makes total sense because
The other thing we're seeing in a lot of stocks is you can see in Apple here 2 days ago we had the gap up too, right? So that's another little clue that hey, things are getting, they're bubbling and churning and we're getting parabolic. And so that's why we're locking down. I think there's some of the other examples that have some nice big gap ups that we're going to take a look at probably.
yeah, I wanted to take a look at that. Here's an interesting one. Um, C8 the CHRS. Let me get this off here. I was playing around with something we were talking about last night on the chart. So, but anyway, check this out. This CHRS just triggered on 6/14, like just a couple of days ago. Actually, 1, 2, 3 days ago. And I thought when I was looking at this chart, it really stood out as, and it was the only one that triggered that day. But I mean, it's pretty clear to anybody that has been drawing lines on charts for a while, like we have. It's pretty clear that this was just an absolute beauty, right? With stock in a nice sort of uptrend, real nice orderly pullback, trend line break, and if I had stochastics and a MACD on there, they would have gone down and then started to turn back up. And so this was really a beauty. And I noticed that this morning the price action on this was really super weird, right? I mean, I'm looking at my thinkorswim on the other screen with a 60-minute chart. Let's look at the intraday just to see what happened here. So I mean, there must have been some sort of news or something, because look at that. In the very first 5 minutes, the stock gapped up and spiked way up there to where the target was, and then came back down. And so that's kind of interesting, because this was basically the only one that triggered that particular day. And I remember looking at it myself thinking, boy, that's just a beautiful pattern, right?
Yeah, nice. That was a real nice clean, wedge setup that formed over like about a 2 week period. So everything, very stable and an uptrending stock. Uh, yeah, and you can see how, they ran it right up again. We're getting the 3/4 bounce to overhead resistance in a lot of these stocks right now. You're going to see that the market's doing the same thing. A lot of the stocks are doing it. So
The trailing stop on this, the original stop, I had it marked on here, but I didn't actually put what the value was. But I noticed that as of last night, the trailing stop on this is all the way up to break even, right at 1850, and so like easier to look at. So that's pretty interesting. The trigger and now the trailing stop is right there at 1850. And what's really kind of strange about this one is, in order to like actually have maybe got a fill at that target, you literally would have had to have a limit order in up there at that
oh
target.
yeah, yeah. If you're going to play the first target, or I mean the system target, right, and take some or all, have your limit orders in good till cancel, because you never know when the price will like bleep up there for 2 seconds, and by the time you're coming back from making coffee or something, you realize, hey, I could have got out right at the target and I missed it, right? So definitely have those good till cancel limit orders sitting in there.
Yeah, because you can see what it's doing now. It had some sort of a news spike or whatever initially, and now it's kind of fading along with the overall market. So, well, just like you'd have a hard stop in, right? I mean, you'd have your hard T stop right now at break even, and
Yeah,
so
what
that's
was
a
the target on that?
2095.
2095. The exact high today was 2097.
Wow,
So yeah, so
interesting.
you would have gotten taken out like by the pennies past
Yeah.
if you had your limit orders sitting there.
Hey, there's a couple stocks that I wanted to look at that I had talked about. Well, let's see. The first one is this SMG, right? So, working on some other stuff the past few weeks, and so I was doing the shows solo. And what I was trying to do was kind of go through some of the stocks that were triggering that I thought looked really good, right? And one day, one day there was only a couple, and then one day there was like five stocks that were on the triggered today list, and so I was attempting to figure out, which one I thought had the best chart pattern, but I had these two like jotted down from, several weeks back, and this one's, the next one I want to talk about is going to segue into our next segment, but this one's kind of interesting, and just a beautiful uptrending stock, right? Real nice sort of solid uptrend. And then there was that little pullback here and consolidation. And so this thing, the trigger was at 89, closed above the trigger that day. Very next day I circled like, what would have been basically a reasonable entry at the open. And so here we are. And so, what this is leading into is the idea of taking partial profits at the target and letting some run, because you can see that, some of these stocks, I mean, they hit the target, maybe they stall out a little bit, and then they continue to go up. And so, I think that like scaling out is probably, and we've talked about this a lot of times, but scaling out of the position is definitely the way to go, I think.
Yeah, it is, and I'll tell you why. And remember, you don't have to. It doesn't have to be an either or. If we're in really dicey market conditions and nothing seems to be where stops are getting hit and nothing seems to be falling through, like we went through a little rough patch like a few weeks ago. Um, have tighter targets and just take your profits and let the market, the dust settle in the market, and then when things pick up again, then you can go back to two-stage exits. But uh, any more than a two-stage exit gets a little bit too meticulous, but first target and then trail the rest is a great way to trade.
What's interesting about this one is along the lines of what we were talking about before. This stop is really tightened up here. It's at 97.50. The low today was 97.59, and so that target is amazingly, this is still an open trade, but the trailing stop, the T stop, is way up here at 97.50 now. So it's going to, it seems to me that sort of based on the system tightening these up, it's almost like some of the trailing stops have moved up, like they're almost like parabolic stops now. Is that a function of the market rallying all the way back to the highs?
That's a function of what we were just talking about, how the system is knowing that it's got to really tighten everything down, and so if the regular T stop starts to go parabolic, it can only match like the real parabolic stop too. So there's a couple in there I noticed that the T stop is exactly the same as the parabolic stop right now.
Now that
So
you
yeah,
mention that, I just noticed that the P stop is 97.52. So that's kind of cool. I mean, well, here's the thing. This is like a guaranteed locked in winner. And worst case scenario is you touch that, but it could keep going. And so hey,
yeah.
that seems like a great place
Hey,
to have the.
a great scenario today is if the market interprets the Fed news is bullish and the markets blast off, we could see a lot of these stocks that are sitting right above the tight stops right now just take another leg up. So, so it's all eyes are on the Fed today, basically, right at the.
Absolutely, absolutely. All right, well, so this very next one, the same day, like let's see, when was this? This is back here. It would have been this Wednesday, 5/22. So just about 4 weeks ago, I guess. It would have been 4 weeks ago. I had two picks that I thought looked pretty good, and this Scotts Miracle Grow we talked about. They do like well, obviously in the spring, everybody's planting flowers and fixing up their lawn and all that type of stuff. And so, it kind of makes sense that seasonally speaking, this is their best time of year. This was probably, an earnings beat back here. So, but I want to segue into our next segment by looking at the other one that on the very same day, on Wednesday, 5/22, this was the other one that we talked about, the old mattress company, Tempur Sealy, right? You heard of Sealy mattresses and
Yeah, yeah.
Tempur-Pedic mattresses. This was the other one, and same sort of situation. Really nice, nice sort of smooth, orderly uptrend with a lot of where it kind of gets extended from this main trend and comes back and comes back. But what I wanted to talk about today is yesterday, and so what happened yesterday is like some news came out that basically they expanded their mattress market into some other chain of stores or something. But what you see there yesterday goes back to a video and a training we actually did. I believe it might have been in January of this year. What's called the price volume crescendo, right?
Yeah, I remember that. Yeah,
And
yeah.
so that's exactly what it is. And I was thinking maybe we'd talk about that for a minute here because when you see if you're in a stock and you see that gap up like that, we actually you came up with the price volume crescendo thing, which basically gets you locking in the profit right up there at the high, right? That's kind of the idea of it. And I
Yeah,
know that
right at the open of yesterday, you would have got out right
yeah,
up
there you
there
go.
at what 74,
Yeah.
whatever that open was.
And look at that volume too, by the way. So, and so yeah. So you want to talk about that for a minute? You let me know if you want to when you want me to go to the slide because I know that you brought a slide for review of that.
Sure, sure. So looking at the chart for TPX, like Bill was saying, we got a nice move off the entry zone there. You had a couple days push up, and then it kind of consolidated again, and then we got a final day where we pushed up, and then the next day we had that big gap up, right? So the question is, well, how would you know that you should take profits there, right? And a lot of the times when you follow this little trick we're going to review here, you'll be out right at the perfect place and you look like a genius to your friends. They'll be like, how in the world did you know to sell there, right? Well, let's pop over to that slide and we can review the basics.
Okay, let me go
Very
to
good.
that. Here we go.
All
Price
right.
volume crescendo.
Yeah, so you can put a couple things on your charts. Um, Basically, just put a 5 period SMA and a 3 period SMA of the highs. Okay, and so we get a little combo effect where you typically see, if you look at the number one there, that bar, you typically see the low pulls away from the 5 period. And anytime you see that in a direction, that's a little hint momentum is picking up in that direction. So there's a little trick for you right there. Any low that pulls away from its own 5 period denotes momentum, a pickup in momentum in that direction. Then the very next day, we gap up above the previous day's highs, and we're up above the 3 period SMA of the high. And typically, you see the day before closes above the 3 period SMA of the high, right? And so we had that occur in that stock. So there's a little trick. And by the way, obviously, you know, what's nice is when this occurs after you've already had a nice run up in your stock, right?
Hmm.
So maybe the stock's already hit the system target, and then you're even squeezing out a couple more percent, and then all of a sudden you get this parabolic pop up one day, right? The price volume crescendo. Now I have volume in there. A lot of times you'll see that the volume will totally spike too, right? And so anyway, so the trick is real simple. You just exit right at the open. There's
Sure.
no, yeah, you don't think about it. You just anytime you see these after your stock runs up and you got a really nice gain, you meet this criteria and you have a decent gap up above the previous day's highs, you're out at the open and boom, bada bing, bada bang.
So basically, you're just sort of quantifying using those moving averages what sort of makes sense, and most traders know they've been doing this for a while, that that you're in a stock and you get a gargantuan gap up one morning on news. uh, Generally speaking, you're better off just taking the money off the table.
Yeah, especially after you have already, uh, made a nice move on your position, right? Now, see, so here's the question. Looking at this chart here, if you give me like a horizontal line at 74, um, ask yourself with this current um, technical setup, how long it might take before the stock can get back above 74. It could be a long time or not, never, right?
Sure, sure. I
Yeah.
mean,
So the
that's
point
sort of the
is
nature of these things, right?
exactly. So I mean, that could have been it. That could have been the blow off top, and this stock, 2 months later is down in the 50s, right? And you were out at that absolute high zone, and you look like a genius, right? So, this is just a great little trick. It's real simple. Any stock that is moving in your favor, and you're seeing that percent traction building up, start looking for the big long range day move and the gap up the next morning, and you meet this criteria, and this is a way to squeeze out as much profit as possible on this type of a technical move.
This stock actually sort of has a habit of, reverting to this like main trend line here. So absolutely. I mean, to wake up to an opening gap like that and just look at the chart. You know, they say, fear and greed or whatever. I mean, that's where the greed kicks in. And so your price volume crescendo, like your little strategy there, sort of adds a lot of objectivity to it. And that's what technical analysis is about, really. And is being objective. I mean, that sort of helps us remove the emotions from trading. And so I like it. I like it. So let's see, what else were we going to look at here? Boy, there's all kinds of interesting things we could look at, but we're already kind of into the show here, and so I know that you brought some other slides here, and I think probably it would be a good time to go into that because let's see what this next slide is that you got here. Oh, well, let's go over like some of the basics here for any of the new members that are in here. You want to talk about the five successful swing trading criteria here?
Yeah, we're going to talk about a little money management strategy that I'm going to present the rules of it today, and then you can analyze it and follow it. It's kind of a high octane money management strategy that works really great. And before we get into the mechanics of that, it's a good idea to just kind of review what we're working with and how the system operates and everything. And so, if we go back to the basics and talk about successful swing trading, it really depends on five things, right? The stock selection. We want to deal with stocks that have strong momentum to the upside and not try to catch stocks that are, in big sell-offs over the last 3 months trying to guess where the bottom is. That's one of the roads to ruin. The timing of our entries is very crucial. All right, and so the system is designed to give us these really highly accurate trade barriers to work with. The accurate stop placement, because the thing about stops is they're a necessary evil. We have to have them to prevent the catastrophic risk. But if they're too close, we just get knocked out of what could turn into a big move, right? So there's a delicate balance between, we want to keep tight stops, but we got to give enough initial wiggle room because we want to stay in for the big follow through. So the system is designed with various ways to detect on each individual stock where is a great place to stick that, initial trailing stop. High probability targets. Um, the bird in the hands or two in the bush type of mentality of when we get, like we looked at some good examples today, where we get stocks really move in our favors, it helps you know where is a really good key spot to take some off the table, right? If you're guessing, you might not hit the targets or you might take profits too early, that type of thing. So the system does our high probability targets for us. And then, of course, there's the money management, and that's how you manage your positions. Now, the system as it is, the information we get, it's open-ended, where you can decide how you want, how big of the positions you want to take, uh, how you want to take your exits, all out or scale out, that type of thing. And you can determine how you're going to pyramid your size. That's on you, right? But we've got lots of different little recommendations on that. Today, if you want to go ahead and move to the next slide, Bill.
Okay.
uh, Today we're going to talk about uh, a strategy that is a little bit more high octane as far as the money management. And so the first thing is that the system uh, is, and this is another thing we didn't really talk about. The system is tightening down right now because of the market conditions. We've had a lot of volatility, folks, and we had a
Sure,
little
we had
rough.
that 6% sell off in May, right? And
Yeah,
typically, if the S&P goes down 6%, the average individual stock, gets hit quite a bit harder.
yeah, and so we went through a little rough patch, and so, not all stocks, but some of the stocks went through a little rough patch, and there was like quite a few stops getting hit here and there. However, because of the volatility and because of the level of the sell-off, it set us up again for a major bounce, which the system caught, in spades, right? But what's happening now with the nature of the market, and where the market is, basically sitting, the system is automatically starting to squeeze things down now, and you're going to see, we're going to see some more high octane type setups, coming through the system right now. Now, so the first thing is the stock selection. So the stocks that are coming through now are going to be super high octane things that are coming through the filter. We're not going to see a lot of, because the reason why is a lot of stocks that were in that high octane uptrend have now broken down and have created huge congestion zones. So they're kind of like filtered out now for a while. Anyway, let's go to the next slide. And um, here is, we're just going to do a basic review of the swing trading parameters, the way this system is set up and what we get to work with. Remember, we got the trigger price, and think of that as a trade barrier. Whenever you see that, a stock come into the pending list and it's got the trade barrier, don't think of that as, oh, that's where I got to buy the stock. That's where you want to think of, you don't want to attempt to trade the stock while we're below that barrier. Okay, it's just the opposite mindset. Now, what happens is, many times we see that trade barrier continue to move lower and lower as the stock continues to pull back, and then we end up with a great entry point, right? So if you see a stock hit the pending list and the trade barrier seems like way up there, don't shake your head and go, why would I want to buy up there? That's not where you want to buy it. That is the barrier at this point in time to actually taking a trade, right? So once we get price close past the trade barrier, uh, we're going to have an initial protective stop, and we're going to have the system, we called it the delta target, right? It's the first high probability target that the stock's likely to run up and tag, okay, based on that stock's own recent ATRs and all that jazz. And so as the price moves towards the system target, you're going to see the initial protective stop start to move behind price, right? And then what we're looking for, and again, we were just talking about this, the scaled exit, sum off at the target and then let the rest run, right? And what you do then is you just let the rest run with the regular system trailing stop. And if you would like, you can include the parabolic stop if those hit. Parabolic stops occur probably on about 30%. I'd say about a third of the trades that go through probably end up with parabolic stops. And so then you can switch to using the parabolic stop. So you can see here how we got a high probability target where we can take some off, and then we can just let the rest run with two stops. Okay, the regular trailing stop, and like we were saying, right now we're getting the regular T stop, the regular trailing stop is starting to pull up and tighten to where some of the parabolic stops are. So let's go to the next slide. So here's what we're going to talk about today. I call this a 70-30 swing trading money management strategy. And this is a high octane money management strategy that you can adopt. And again, you don't always have to lock yourself into one thing. You can kind of mix and match. During certain market conditions, you could switch and use this, and then maybe you want to open things up. Uh, so what I just showed you on the previous slide is I'll call it like the basic generic strategy, right? It's easy on your nerves. There's not a lot of fine tuning. You don't have to do too much math. You just follow what the system's telling you to do, and you got those two options, right? The system target and then your trailing stops. This strategy utilizes the same principles, but it tightens things down a little bit. And so here's how it works. What you're going to do is you're going to break your position into two parts, and you're going to do like 70-30, right? So we're going to use an example of 100 shares, even though you might be starting off trading, 10 shares of a certain stock. We're just going to use 100 as the example. So let's say you took an entry with 100 shares. So what we're doing on this strategy is you're going to take a quicker profit, right? Uh, you need to compute the distance, the difference between the system target and the trade barrier, right? Compute that out as a price, right? Don't worry about the percent. Then just cut it in half, and then that's your target. You're going to go for a half target. But the key here is you're going to use that exact same distance from below the barrier for your trailing stop, for your initial protective stop, right? So you got a 1-to-1 ratio there on the uh, target and the stop on the full position. So you're taking 70% off at that half target, right? So in 100 shares, you're going to pull 70 shares off at that first target area, right? Then you're going to hold the remaining 30% with either the normal trailing stop or the parabolic stop. And here's the thing, with the parabolic stop, you want to go ahead and when you get a parabolic stop, you want to switch to use that and lock that in. This is a high octane money management strategy. So in other words, use the regular trailing stop until you see a parabolic, and then definitely you switch to the parabolic. Okay, so those are the three basic rules.
Okay, so exit 70% of the position at halfway to the system target. So what we're doing basically is sort of, this is more of like a little kind of a short-term, high octane, locking in profits quick and being sort of proactive as far as catching stocks that really take off. And okay, that makes total sense. So this next slide here, I think, is probably gives a little bit more detail of what you're talking about. So I'll let you continue here on this next slide.
Yeah, so this next slide shows you the breakdown of exactly how you're going to be playing this money management strategy. So again, we've got the trigger price or the trade barrier, and and here's the thing: you're not always going to be able to get in right at the trade barrier, right? So there's a little bit of fudge factor in there, but you're still trying to go for the 1/2 targets, right? And um, ideally, you want to get in as close as possible above the trade barrier, but there's days where you might give up a percent or so on your entry. That's fine. It averages out over the big series anyways. So yeah, so 70% off at that first half. It's half of the target, right? And then the remaining runs with the regular trailing stop, and then when there's a parabolic stop that comes in, you definitely lock the remaining in with the parabolic stop. All right. Now that is uh, the layout of uh, the strategy. And let's go ahead and go to the next slide, because then we can use a good example of one, and then I can get in and explain a little bit more about why this strategy works so good. So this is one of the ones on our list right now. Did we? I don't think we looked at this one today, did we?
We hadn't looked at it yet.
Yeah. Why don't you put the chart up real quick and we can take a peek at the chart and then we can talk about.
All right, there we go.
Okay, so notice in this example that uh, we had, what's the entry on that one? The entry
80,
was,
8280 is the trigger.
yeah.
So we got that over
So
here.
nice entry. We got a nice big run up, and this stock took off relatively quickly in our favor, right, and ran up parabolically. Okay, and so this gives you an example of a good strong move off of our entry level, right? And now let's go ahead and go back to that slide
Okay.
and we'll see how it breaks down. So let's look at the left part of the slide where we got the 70% off at the 1/2 target distance and then below. So here's an example. What did I use? Oh yeah, so I used a 100 share example in this. Uh, and so notice 70 shares came off at the half distance to the target. So again, what you want to do is you can you can do it one of two ways. You can compute the actual price difference and then just cut the price in half and then just add that number back to your the trade barrier, or you can do it percent wise if you want and use can compute half the percent and then compute the percent above. Either way, and so in this example, I just used the price move. So in this example, the target was $10.40 above the um, trade barrier, right? So you cut that in half, and your price move is $5.20 to your half target now, right?
Mm-hmm.
So 70 shares comes off, and you can see the amount there was $364. Now, if you look straight down, 100% off at negative 1/2. Again, a drop of $5.20 below the barrier. Your loss was $520. Okay. So you're a little lopsided there. However, when we get these parabolic run-ups, in this example, and this is based on the stop right now on this particular stock we just looked at, you can see we had a $13.20 price move now, and that's locked in with the parabolic stop, or actually with the T-stop too right now.
Mm-hmm.
And on the remaining 30 shares, you've got a profit of $396. So that's an extra $250 that you squeezed out of the trade just by hedging your bets and breaking it up this way, right? Now, there's other mechanics that go into this too. Uh, you could, we'll have trades that go through that hit the, your half target and then fizzle out, and either uh, you know, by the time you hit your target, you should be at a point where you're not going to take a loss. That's another thing that's nice about this. It's very easy to hit that half target, and then you're effectively at break even, virtual break even. Even if you don't put your stop right where you entered, you can be at virtual break even. So you're going to have follow through where you get some that you get to break even and you get knocked out. You get out with maybe the equal gain as if you took it all at the same place. You get nice big runners that really move. And so here's what this does over the series. Don't we have some examples that we like? I think Cray was one of them.
The
Wasn't it?
buyout.
The
Like you're talking about
buyout.
like a buyout? Yeah.
What was that final? Was like 30? Was it 39% or
Well, let me
30?
pull this chart up. Yeah, I
Yeah,
mean it was as far as like the this one just sort of happened out of nowhere, right? Like this stock just
that's the
one
way
day,
it happens.
yeah,
Yeah.
yeah. It ended up 36.5%.
All right. Yeah. So hedging your bets like this and letting like 30% of your position ride allows you to catch the big, moves like this and lock those in. And this is where the icing on the cake comes in, and also the extra edge that you attain over the series of trades, right? So in other words, we're capping off the max risk uh, on all our positions at the one half the distance from the target, but we're letting a portion, potentially move much further. And so we get the odds skewed in our favor then over. Now, the only thing that can get you on this, the only little Achilles heel, which there's no way around, is if you have a catastrophic gap against you. Um, and that could occur on your full position, or that could occur on a portion of your position, and that's just the nature of swing trading. Uh, Knock on wood, you can go months and months and months, and as long as you're paying attention to earnings and any other kind of news about the stock, uh, then normally you're not at too much risk for that. But then again, but then again, we have gaps in our favor too. So it kind of pans out over the series.
Ah, interesting.
Yeah, so
Interesting.
this is kind of the high octane money management strategy, quicker profits, and notice, we've talked about the stage exit is you take half off at the regular target and let the so this is just the ratios are a little bit different on this. And here's the thing, so the math is, let's say you did 100 shares, so you're taking 70. That's easy math, right? 70 off at the first target, and the 30 shares off at the on the trailing stop. But if you're down at 20 shares, let's say, right, because you're going to be computing your positions off of your uh, 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 risk amounts. Um, then it can be, it could be 75-25, right? You take 15 off at the target and let 5 shares run, right? So it doesn't have to be exactly 70-30, depending on your. So if you were in a trade with 50 shares, you'd take 35 shares off at the target, and then let 15 shares run. See how that works? So it doesn't have to be exact, but just in the ballpark there.
All right, well, let's move on to this next and final slide here. And this talks about gradually adjusting your position sizes as you go, right?
Yeah, and so right. So one of the things with uh, any of these money management strategies that you can employ, and especially this one, is you start off with very small positions, and then over time, you let your own performance pull you up by your own bootstraps, and you build size. That's how you, in any kind of trading system, that's how you make more money, not by taking more trades or doing any riskier stuff. Finding a methodical approach that works over the series and that has a built-in edge, which I just showed you, the system's got a built-in edge, and just following it and then increasing your position size gradually over time. And with swing trading, I tend to always recommend to folks spend like 2 months at one level, because swing trades, it's not day trading. You got to follow through. Sometimes it's 2-week turnaround on a trade, right? So spend 2 months at one level, and if you're profitable, move up to the next level. And over the course of the year, you'll be, it's like the Fed rate hikes, right? You'll be like hiking up your position sizes gradually over time.
Interesting, interesting. I think that I wanted to mention a couple of things here real quick, and one of which is the if you wanted to review the price volume crescendo that we talked about earlier, selling, on a big gap up, you could actually go to the videos page in the service, and way down. Whoops, I probably shouldn't have clicked that, but because we got a lot of videos here. So, but way down towards the bottom of the videos page, there's actually a training video that I have labeled down here, the price volume crescendo. So let's see, it's somewhere down here, so you can look at that. And then the other thing that I was going to mention is that in the service, over on the blog page, right? Over on the blog page, I think what I will do is I will take your nifty little strategy here that you came up with, and I think maybe turning this into a blog post that kind of spells it out with some bullet points and goes a little bit more in depth to explaining it would go really nice, sort of hand in hand, because it's a little bit of a complex strategy, and like you say, people are going to have to pull out they're going to have to compute what is half the distance from the system target and the trigger price. And so I think that this would probably be a really good kind of like make for a really good blog post to explain everything.
Sure. Yeah, I mean the only math that you really have to do is you just figure out what the where the system target is, and you cut the distance in half, and you use that same amount for both your target and your stop on the full position. So in other words, you're ignoring the regular initial trailing stop, and you're ignoring the system target, and you're just doing your own math, and then splitting your position into the 70/30. That's the only math you have to really do. Other than that, it's the same exact type of follow through.
Yeah, it makes total sense. I mean, what I would call this is a little bit more of an aggressive, proactive way that people can choose, if they like, to be a little bit more aggressive with the trades rather than just following along with the basic strategy. So
Yeah,
that's where.
what's nice about this is one final comment is one of the things that confront when we're trading is the woulda, coulda, shoulda. Like, oh, the price runs up to a certain area, and you're like, oh, I should have took profits there. Darn it, I should have. Or you take profits somewhere, and then the price continues to run massively in your favor, and you're all out, and you're like, dang, I should have hung on to some. So this hedges your bets and gives you a viable strategy to take advantage of both, right? Quick locked in profits, and then so that you avoid the, I shouldn't have took all everything off the table scenario, it allows you to leave a small portion running. And again, the other thing too, remember one of our big risks in swing trading is the fact that we have to hold overnight, and holding overnight, every night we hold exposes us to some form of overnight, catastrophic gap down. So when we take 70% off the table and we leave 30% run, what we're doing is we're basically lightening our risk way down, right? But then we're leaving something to work for us in the market, and we can take advantage of those big, sudden, surprising, parabolic run-ups that nobody saw coming.
Sure, sure. And the other idea is that it's not uncommon if you're looking at half the system target to take some profits off the table. It's not uncommon that that could happen in just like a couple of days, a few days. And so it's like I say, it's more of an aggressive strategy because you're locking in some of the profits much more quickly. So yeah, this is a great strategy, and we'll get into it, some of the more finer details, and spell it all out again, like I say in a blog post. So, hey, well, thanks for showing up today, Jeffrey. This
No
was this was
problem.
a really good and informative training that you did
Well,
here.
yeah, we've had some great action, great follow through in this latest big, up move in the market, the big, swing wave in the market, and so I wanted to get in here and give people extra tools to work with.
Yeah, well, I'm really impressed at the way the system has sort of adapted to these latest market conditions. And I know there was a ton of open trades, and those stops got tightened up, and a lot of those have been getting closed, and so everything's really looking good. And I've looked at some of the charts of the stocks that are pending, and like you say, the high octane stocks that are ready to trigger. So, basically the rest of the week is going to be dependent on, the market's reaction to what the Fed says at 2 o'clock. And so I expect between now and then things to just get really dull. I've noticed, like, while we've been doing the show here, we've traded essentially in about a 5 point range, and it looks like the market's just kind of slowing to a crawl here. So, hey, this was a great show, and so we will see you here next week. Thanks for tuning in, guys, and we'll be back a week from today.